something massive is happening right now, a fundamental shift in the world's economic balance. We're going to dive into this great rebalancing using two brand new investment reports as our guide to see exactly where the money, the power, and the influence are all headed for the next decade. So, here's the big question we're tackling, right? Is the global economic map literally being redrawn as we speak? Is that center of power really moving from west to east? Well, according to the data we're about to look at, the answer is a huge flashing lights yes. We're going to break down the irreversible megatrends that are driving this whole thing and see exactly how the world's established powers are being forced to react. So let's get into it. Okay, to really get a sense of the scale here, just look at the growth of the middle class. Between 2020 and 2030, Asia is on track to add 1.5 billion people to its middle class. Now compare that to the Americas. That number is just 42 million. This means Asia's middle class growth is a staggering 35 times larger. I mean, this isn't just a trend, it's a demographic tidal wave. And that leads us to the first major takeaway from these reports. They argue that what we're seeing, it's not some temporary cycle. No, these are permanent, irreversible megatrends. And they're creating a completely new economic reality. And, this quote from one of the reports just nails it. The authors don't see Asia's dominance as a maybe, they see it as an absolute inevitability. It's already baked into the numbers. The only real question left is about timing. So where is all this power coming from? Well, it's not the old story of just exporting cheap goods to the West anymore. No, this boom is being generated from within, fired up by an enormous internal engine of people and their brand new spending power. By 2030, Asia is going to be home to 3.5 billion middle-class consumers. Let that sink in. That's 2/3 of the entire world's middle class. We are talking about the largest consumer market in human history, all concentrated in one region. And you better believe those consumers will have money to spend. By 2035, discretionary spending in Asia is set to hit $35 trillion a year. That jump of $12 trillion is like adding another entire Chinese consumer economy to the world. It's just massive. Now, what's really fascinating here is that this isn't just a China story anymore. India is the new growth champion, adding a mind-blowing 600 million people to its middle class. Sure, China's growth is maturing, but its sheer scale is still absolutely dominant. And then you've got the ASEAN nations, this incredible group adding another 112 million consumers. It's a true multi-engine powerhouse. But look, it's not just about who's buying the stuff, it's about who's making it. The second pillar of this whole shift is production. Asia is now, without a doubt, the world's workshop. And the report argues that this manufacturing dominance is basically structurally locked in. I mean, just look at China's share of global manufacturing. At over 28%, its output is more than the United States, Japan, and Germany put together. That kind of scale creates efficiencies and supply chains that are just almost impossible for anyone else to replicate. And this is the real kicker. This isn't just about assembling toys anymore. Asia has an absolute stranglehold on the most critical technologies of the future. You've got Taiwan's TSMC making over 90% of the world's most advanced chips. South Korea has a duopoly on the special memory that's essential for AI, and China's BYD already dominates the global EV market. This is high-tech supremacy. So, what about all that talk of reshoring jobs, bringing manufacturing back to America or Europe? Well, the report pretty much calls that a myth. What's really happening is what they call a China plus one strategy. Companies aren't actually leaving Asia, they're just diversifying within Asia, moving some production to places like Vietnam or India. And ironically, this just strengthens the region's entire manufacturing ecosystem.
Okay, so if Asia's rise looks pretty much inevitable, the next logical question is, how's everyone else reacting? And that's where our second report comes in. It details Europe's quiet but very deliberate pivot to the east as it pragmatically rebalances its economic relationships.
At the heart of this pivot is an idea the report calls transatlantic drift. It's basically this growing gap, this divergence between the UE and the US on some really key economic and policy issues, and it's pushing Europe to start looking for other partners. And there are really three big things fueling this drift. First, the energy crisis after Russia's invasion of Ukraine left Europe feeling incredibly vulnerable. Second, a new wave of US protectionism and huge subsidies is being seen in Brussels as pretty unfair competition. And third, there's just a massive regulatory gap on everything from data privacy to AI. And you can actually see this happening in the trade numbers. While the US is still a huge market for EU exports, Asia has become the dominant source of imports. It now supplies nearly a quarter of everything the bloc buys from the rest of the world. If you want a perfect real-world example of this, just look at Germany's car industry. Giants like Volkswagen, Mercedes, and BMW now depend on China for a third to 40% of their total global revenue. The idea of decoupling from that, well, for Europe's economic engine, it's just a financial non-starter.
Okay, so here's where it all comes together. What happens when you smash these two huge trends into each other? You've got the unstoppable force of Asia's rise meeting Europe's very practical pivot to the east. And the result? A complete redrawing of the global economic map.
One of the reports puts it perfectly. This isn't some risky bet on emerging markets. No, this is about positioning for the return of economic gravity. It's a permanent structural rebalancing back to where the world's economic center actually was for most of human history. And the Europe report basically confirms that this isn't just a theory. Europe's search for economic multipolarity, from multiple partners and poles of power, it's not some rejection of the West. It's just a rational, logical response to this new reality. And for anyone watching the markets, here's the kicker. Despite having almost 50% higher growth prospects, Asian stock markets are currently trading at a 40% discount compared to the S&P 500. The report argues this huge gap between economic reality and market valuation probably isn't going to last. So, all of this leaves us with one final massive question. For the last century, the rules of global trade, finance, and technology were pretty much written in the West. But in a new world with multiple competing centers of economic gravity, who gets to write the rules for the 21st century? Now that is the real rebalancing to watch.